What's up, everybody? Michael Silva here. Welcome to another episode of the Stock Market Brief Show. We still got a lot of crazy stuff going on. We have fears around the new variant. We have Powell talking about tapering. If you watched that today, this is what he said that really kind of set the market on fire. It's probably a good time to retire that word and explain more clearly what we mean by that word. He was talking about transitory, and the market has been reacting poorly to all of that. Like I said, you're watching the Stock Market Brief Show. My name is Michael Silva. We got a lot to talk about in today's episode. It's going to be a monthly recap. I'm going to go over some big picture charts, give you some things that I'm seeing, because let me tell you one thing, some of these charts are just jarring. So let's get into it. Welcome back, everybody. The first one the chart that I'm gonna share with you is actually one of the indicator signal charts, and then we'll get into the monthly charts and the daily 15-minute charts for the more shorter term. But this is pretty interesting. I posted this on Twitter, and really what I'm showing here, this indicator right here, okay? This is the percent of stocks above the 200-day moving average. The 200-day moving average is important. It's known as the Godfather moving average. Many different traders, investors track that to see whether it's trending up or it's trending down. Why is this important? Well, this is showing, once again, the percent of stocks in the NASDAQ that are above that moving average. And right now, we just got a reading that says 28.03. So that means that 72% of the stocks in the NASDAQ are actually below that Godfather moving average. If I bring this up just so you can see it, boom. How many stocks are in the NASDAQ? Well, the NASDAQ tracks more than 3,300 stocks. So we're talking, a large percentage of stocks that are below that key moving average, which is not really a bullish sign. Now let's go into a little bit more detail. Right here is the NASDAQ composite. And as you can see, when there are deep sell-offs, typically the market sinks off. Right there in 2016 or 2015 to 2016, then right here at the end of 2018, and then obviously right here, right here was the pandemic crash. Okay, also to note is this. See these little blue lines up here? All that those blue lines mean is it gave us a warning sign that there was diverging price action taking place in the market. Okay, so what does that mean? It means that the composite was heading up. Meanwhile, the percent of stocks that were actually going up were actually heading lower. So that means breadth of the market was weakening. All right, the same thing was here. The market was going up, but then the internals were weakening. And it doesn't matter until it actually matters, right? But this is what's crazy. This one went up, and obviously this was going down too as well and gave us a notification. But this is what's just absolutely incredible. And yes, this time is very different. Look at how big of a divergence this is. The percent of stocks, this thing is it's fallen off a complete cliff. But the market has been just ripping higher and higher. So what does that tell you? Well, it tells you that very, very few stocks are driving this market. And we kind of know that because we've been talking about that. But when we have these divergences, we typically get market sell-offs. But we haven't got that yet. Are we in the midst of it? I couldn't tell you. I really couldn't. This could really, honestly, once we get into some of the other indicators, this could really be, once we get down to these levels, that's pretty dang overextended to where we'd see a bounce. But we're getting down pretty overextended as it stands right now, and we haven't even moved. So it's like the market can do one of two things that I talked about yesterday. This thing could tank, or we can have just an insane melt up if we start having more stocks participate in this current rally that we've been in. Now, here's another indicator that I've been tracking. Just want to quickly go over this one. I know that some of you already know what this is, but if you're new here, well, I'll go over it. This right here, this one is the summation index, and this one right here is the NYMOT, the NYSE-McClellan Oscillator. NYSE is the New York Stock Exchange. And what I wanted to call out here that I learned from a legend, Tim Ord, is something that he noticed was when the NYSE reaches down to -0, at the same time the NYSE-McClellan Oscillator gets to -300, there is some typical market turbulence that can arrive. So you can see here we actually bounced and then rolled itself right back over. Here when it happened, over here and here, Then we had a big market sell-off there in late 2018. The pandemic gave us an early warning sign right here. Boom, boom, before some more market sell-off. Why am I showing you this now? Well, we are at a 36 reading on the NYSE summation index, and we are at a minus 261 reading here on the NYMOT. Now, that means that this can turn up at any time, right? So it's not like anything bad is happening at this particular moment, but they're both pointing down. The summation index looks like it's going to be crossing down through zero. So we'll see here. And by the way, you might be thinking, well, the market's going to crash. That means this is going to crash. No, don't think like that. That's not what the point that I'm getting across here. The point is that risk is elevated, is what I'm trying to get across. Okay, risk is severely elevated, and we talked about this on Friday. Before this week even came, we saw what the options market was pricing in, a very volatile week. We're seeing that volatility now. It's like, it is what it is. It's just basically prepared us to say, hey, you know what? Maybe we should step back, stop pressing so hard because, market conditions are worsening right now. Now, if you're a short-term trader and you know how to scalp or short intraday, then, that's a completely different story, because during volatile times, that's when you make a lot of money actually as a trader. Here's the 11 sectors that make up the S&P 500, all red on the day. Big move to the downside. Now, it's month's end, right? So, there could be some positioning that's taking place. We did see some increased volume that I'll go over. But, yeah, and the reason why I say this is because you see, like, defensive names right here. Consumer staples, utilities at the bottom of the range, at the bottom of the list. And then you have technology, consumer discretionary. So, as far as, like, potential positioning goes, we might have, positioning back into big tech. Like Apple was, a very strong performer today. But that's just speculation at this particular point in time, because this is one day, right? But if you take a look over here, this is a very serious downward sell side activity that took place. Dow Jones was down almost 2%. Almost everything was down around 2%, other than the NASDAQ. The NASDAQ obviously was one of the stronger performers out of the weakness today. Now, we dive into these 11 sectors. Let's take a look here from an absolute perspective on these charts. So this one, that's the S&P 500. We'll get into that one later. But the consumer discretionary is still holding up relatively well at this particular point in time, but it did give way on the 20-period moving average, and it's still kind of, above that 201, 202. Communications has been the dog of everything, and this thing just took a monster hit to the downside. So be careful with the communication sector. Right, if you're going from long perspectives, you'd think that a bounce would come eventually, but this thing has just been selling off like crazy. Technology also still holding the 20-day moving average. We saw that big burst in volume today, pretty much across the board, but that could potentially be just because of month's end. But it is still holding together rather nicely comparatively, and from a relative standpoint to these other indices. Now, industrials, big, huge move to the downside. That was just a nasty candle. You can see here materials, a big, nasty candle into the 50-day moving average. XLE has been in this just very violent, choppy environment as it stands right now, and it's hanging around the lows of that range. And then you see XLP got completely hammered today too as well. You can see just a big, big, nasty red candle right there, down almost 3% on the day. XLRE, it's been in this trading range right here, but we did see obviously a big sell-off when we closed at the low of the day. Financials took a big gap down and sold off even more today. Also pretty nasty, getting below that 20 and 50-day moving average. Utilities also, it's been in this trading range right here, but today, it just saw this big, huge move to the downside, as you can see, along with pretty much everything else there. XLV, healthcare, this one cracked actually a significant support, as well as the 50-day moving average, so be on the lookout there. Just a lot of just scary price action, to be honest. If you take a look at the heat map of the S&P 500, just kidding. We'll look at the S&P 500 heat map right here. You can see all red across the board. Just Apple, Tesla held together, Pfizer, right? They all kind of had held up, but everything relatively was down on the day. This is a very nasty day. Tesla was relatively flat, but Apple, yeah, big hit to the upside there for Apple. Now, if we take a look at the NASDAQ 100, you can see here, more specifically, the big dogs of tech, right? Microsoft, Nvidia, Google. Some of these were pretty severely down on the day, and that's what really drags the market down. We've been kind of nailing that down. If we take a look at yields, you can see here the curve of the 10, the 2. crack this little area that it's been trending in and starting to head lower. That is flattening of the curve. So if it gets to inversion, which means that the 10-year, this is the dark blue line right here, would have to get below the, I don't have the 2-year on here on this specific chart, but it would have, pretend this one, that's the 3-year, but pretend that's the 2. They would have to invert. As we see right here, the 30 and the 20, they have inverted, so that is a yield inversion. 30 and 5 is another one we've been tracking. This one also turned down slightly too as well. And you can kind of see here, you know, you just take a look at all the yields. They were, you know, nice spread around here, but now they're kind of compressing and getting tighter. So we'll see here what develops in as time, I guess, progresses. Let's take a look at some monthly charts. Monthly charts, okay, we're going to be kind of quick here, so bear with me, but S&P 500 was down just under 1%, so not really that weak of a month, but the candle that it printed was pretty nasty, shooting star type candle. The only thing that we can really look at to maybe say, hey, you know, something similar was this one right here right before the pandemic. We had a couple right here too as well. So we need to actually see this get below the monthly 5 EMA, you know, to see any real damage. As it stands right now, I mean, 44.60 still an area of support, and it's still trending up at this particular point in time. Dow Jones Industrials was down almost 4%. Pretty bearish looking candle overall. You can see it's, I believe this is called dark cloud coverage, where it basically gaps or moves up higher and higher, but then completely reverses. We closed on the low and through midway of this previous monthly candle. But if you really just look at the last couple of months, I mean, geez, it hasn't gone anywhere since, you know, early 2021 over there. It's just been kind of just going sideways. Now, if we take a look at transports, that put in a nasty type candle, or shooting star, or gravestone doji, whatever you want to call it. I don't know. But it's just basically just a big move to the upside, and then the bears completely reverse that entire move. So are we going to get some follow through and get below this weekly 5 or monthly 5 EMA to see some more sell side activity, potentially down to around 14,000? Hey, it's possible. As it stands right now, though, I mean, it's still, you know, got ahead of itself, right? So we'll see if there's follow through, but it's still monthly 5 EMA, still on an uptrend. PMO, it's still trending up and still strong. It's just seen some, you know, a little bit of a reaction to that big overextended move. So nasty candle overall. NASDAQ 100 also put in a shooting star type candle, not nearly as bad as the other indices that we just saw, but as you can see, it was one big green candle up as a high of 16,764, and then it reversed on itself. And we have the 5 EMA still trending up. So you can kind of see the PMO is losing a little bit of its steam, but it's still in bullish context there too as well. So look at the 15,405. It's going to be a little bit higher as a potential pivot area for a long. You know, if the market wants to keep pressing higher, we've seen scares like this. So, you know, let's not try to call a market top. We've seen scares like this month right there, right? A couple months ago, we've seen nasty candle like this one, and we probably talked about it back then too as well in the month's end recap. So it's nothing to get crazy, you know, about, but just be mindful of this and where it stands for when you are positioning and, you know, managing your risk in your portfolio. NASDAQ composite, not nearly as nice as a candle as the NASDAQ 100. This looks like a transports candle, so a big shooting star type candle here too. So are we going to see some follow through? We'll see. 15,046 is where the NASDAQ composite monthly 5 EMA is at. Let's keep going. Semiconductors, this is what held up the NASDAQ composite, you know, for the most part, and also the majority of other indices, right? NVIDIA was a huge player in last month, but semiconductors were up 11.42% on the month. So that is a very strong move for semiconductors. It saw some good supportive volume. It broke out of this area. We'll see if we can get continuation, or maybe it's going to pull back, you know, to this 280 range and then maybe potentially take off, or, you know, it can do a bunch of things. But just say that is a very strong month, and that really did help out the indices. Take a look at IWM. IWM, definitely that was a failed breakout as of right now, and you can see it's still in the monthly time frame trading within this range. So it got out of this, you know, out of its range, and then it kind of reversed right back into it, but down almost 5% on the month. And you can see the PMO did definitely take a little bit of a toll right here. You can see it's starting to curl over, and we saw an uptick in volume take place, but still, you know, it's still within a trading range overall, and that's what we got to be mindful of. But it did close below the monthly 5 EMA. The monthly 5 EMA, you can't put too much weight on this one because it's been relatively flat, and in a sideways choppy market, it's not it's not as easy to spot it as a pivot point because it's not in a specific trend. It's rather neutral. All right, so let's keep on going. Here's the dollar. Big move in the dollar, up 2% on the month. We've been tracking this. We were actually tracking while this PPO indicator was curling over, and we're starting to see it get bullish. And we're starting to see, obviously, price of the dollar move up. Now, I bring in the monthly chart because there's a possibility that we head higher to around 98, maybe even around this zone up here. That's what that would be is a retest of this trend line that it broke down from, and it also tagged the upper Bollinger Band too as well. So if we get a continued like little fierce spike, right, people flood to dollars for potential safety or something like that, maybe that would be that area of resistance. But overall, even longer term, it's really in a sideways range. So, think about that. So it could come up, potentially even higher, just chop, 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 chop. We'll see what takes place, but I wanted to call that out here on a longer term time frame. The TLT also has been in a sideways range, but it was up 2.277% for the month as people have been flocking to, I guess, safety, right? I mean, wherever they can get some alpha as the market has kind of been all over the place these last couple of days, this week at least. But we can see here the PPO starting to turn up, the histogram's turning up, but it's kind of getting a little, if you are a range trader, this is in a range. So technically you would consider actually going short right here. And I'll show you on the daily time frame how this makes more sense. Short right here, and then you try to play it to the lower end of the range or, just kind of the middle point right here that's been pinging-ponging around it. But I will say that on the monthly time frame, it's building some steam here. If it does start breaking out, potentially that might, bring a new news event and see some more fear potentially there in the markets. If we take a look at Bitcoin, Bitcoin's kind of hard to read on a log scale chart. As you can see, I can't read any of the numbers, but overall, when you look at a log chart, you can just see how big these candles are. They're like the same like range candles as these, but it's way up here. So it's obviously a very volatile asset, but it is above the monthly 5 EMA. If I actually zoom in and take off the log so we can just see it a little bit clearer, you can see we did come down to around this previous high right here, and we found some support, and it's still holding up. But you can see this is the market went high, it went higher, and it did so. So it's, bullish price action, but the bulls are getting weaker on this monthly time frame if you just take into perspective the RSI and the PPO. So it's basically saying the bullish momentum here has been weakening on this move higher. That doesn't mean, anything. Things can stay overbought for a very long time, but I just want to call that out so you are obviously aware. If you take a look at gold on the monthly time frame, gold was down, pretty nasty candle too here. You can see it was like another shooting star type candle, and you would think that with the data that came out today around Powell talking about transitory and we should remove that, you'd think gold would catch a bid. So one of two things could be here. Gold market, it's just going to be wonky and continue to trade sideways, or two, traders are wrong right now and the market's going to react differently very soon. We do still have this overall cup and handle formation. It is still potentially flagging here, but it's just a weird asset right now. It's just going sideways. It's not doing anything. So yeah, perhaps maybe if we start seeing the histogram right here and then also the PPO start turning up, that could be a good sign. You can see the Bollinger Band's actually starting to tighten up right here too. So, expansion can lead to, expansion was right here, leads to contraction. Contraction can lead to expansion again. So we'll see if that's in a bullish direction here or a bearish divergence. But it's a monthly chart, so, it's a longer term. CRB index took it on the chin, almost down 8%. And a couple things to note, this is a very, very strong move, and this could be considered potentially a rising wedge where we actually start pulling back and start selling off here into around 190, the 20-week moving average. It did close below the weekly 5 EMA. Is inflation still going to, continue to rip? I mean, maybe. I'm not smart enough to know. There's really good debates around, yes, inflation will continue to head higher, and there's also good debates as why we might see a deflationary impulse, before anything. But I'm just looking at key levels right here. So that's not the greatest looking sign. It was big time down on the month comparatively to what we've been seeing. The PPO has been turning over. The histogram's been dying off and it's been curling over. And this is really led by oil. Oil was down 20%, almost 21%. That is a very nasty, nasty move. So we'll see if that one also has some continuation. But overall, like on the monthly time frame, you can see like it broke out and then got completely reversed right there, closing, below not only last month, but also the month prior, just engulfing it. It was just a nasty, nasty move overall. So once again, this has been, one of the reasons why I've been kind of saying like, hey, just be careful here. Things are a little bit different. You just need to approach the markets. The market conditions seem like they're changing, and we just need to know what that change is before, potentially pressing a little bit harder. Let's hop into some daily and 15-minute time frames. S&P 500 on the daily chart, nasty red candle. Yes, nasty, nasty, big volume. That could be because of month's end rebalancing. You got to understand this though. Once we get into the 15-minute chart, actually, I'll just get into the 15-minute chart right now. Actually, no, I want to actually wait off on talking about that. But where can we potentially look for a pivot area? This is some pretty nasty sell-side activity. Still right there is the 50-day moving average. That can act as a potential pivot area. So that's what we need to watch. 50-day moving average is around 45.36 as of right now. Here's the 15-minute time frame. And we talked about, this big ramp up, but we talked about it's been doing that, and it's been then bidding completely get smashed to the downside. And that's what we got. What I was going to say on the previous slide was I wouldn't be shocked to see some sort of rally from this. It's like, don't be shocked. Like we get this, it's been all these kind of fake outs. It doesn't mean it's going to happen, but we get this big rip up. Everyone feels fine. Then the sell off. Rip up, fell sell off, rip up. Everyone feels fine. Then a sell off. What we need to pay attention to here is that a couple of things. We have a high, a lower high, a lower high, a lower high. We have a low, a lower low, a lower low, and now another lower low. So yes, this was that dead cat bounce right there. So the short-term trend is still pretty darn bearish. Now, from a bullish perspective, you can look at this and be like, actually, it's actually wedging right now. We have a bullish divergence here on the RSI and a bullish divergence right there on the PMO. So yeah, a bounce from this could make sense, but that still doesn't mean that we're out of the woods. You need to just be very cautious and careful. Shorting this market, I don't think it's going to be easy. I think it's going to probably be, if we're, going into a bear market right now, which who knows if that's true based off seasonality, that'd be pretty crazy. But it's not going to be just like, hey, boom to the downside, very easy. And, it's going to be difficult. And we're seeing difficult right now. We're seeing this big move up, big move down, big move up, big move down, big move up, ha, down, big move up, ha, down. It's like, it is very, very choppy. And once again, you got to be careful. Dow Jones Industrial Average is kissing that 200-day moving average just about. So, yeah, big pull down, getting a little bit overextended on the RSI. And, perhaps this is, if you want to be aggressive, right, this could be a good hedge along right here too as well. If you take a look at this chart, really we haven't, like I said, we haven't gone anywhere. It's just been kind of just going sideways. We broke out, false breakout, very similar to the IWM. Now we're taking back in. But remember, the upsloping, the 200-day moving average is sloping up. Price is pulling into it. That can act as a level of support there. If you want to take that kind of move there. Dow Jones Industrial Average on the 15-minute time frame. This is the ETF, the DIA. You can see here what I would like to see is obviously the 5-day moving average to start slope up, right? We have a high, lower high, lower high, low, lower low, lower low, lower low. The trend is down. However, from a bullish perspective, we have a wedging type pattern on a positive divergence there and a positive divergence on the PMO. So what does this say? We've had bearish price action, but momentum is suggesting that the bears are getting weaker, right? So you can see that by the low here and then the higher low and then the low here and then this higher low, which could suggest that the bulls could be stepping back up to see some sort of pop or some sort of gap up. And we'll see. But just, if you're watching this and you're trading tomorrow, keep an eye on that 5-day moving average. Clearly it's acted as resistance once, twice, 3 times, 4 times, 5 times, 6 times when it broke down actually right there. Okay, so yeah, let's move on. NASDAQ 100, that negative divergence continues to play out. There's still the possibility, for this head and shoulders type pattern. I actually posted something on Google that shows that, hey, if this actually does break down, it could bring us to around, I think it was this spot here where the 50-day moving average is. I think that's what it was. You'd have to go check it on my Twitter, but that would be the full measured move of this head and shoulders pattern. And then that would also be a 10% correction from peak to trough on that specific move. So yeah, maybe something to watch out for. If you take a look at the cues on the 15-minute time frame, whole lot of chop, whole lot of nothing. 5-day moving average looks like a spaghetti noodle, and we keep on chopping around within that range. So we are range bound in the short term as it stands right now. So we can continue to ping pong around as it stands right now once again. Let's take a look at the IWM. IWM is well below the 200-day, well below the 50, 100, and the 20-day moving averages, but it's still within this range. It got outside of its range, came right back in. Definitely this now can be considered a false breakout. Overall, not the greatest move if you are long, so that's why we manage risk here. Where can this potentially go? Well, if it comes down lower, start looking at this area as a potential buying opportunity. If you want to get aggressive, like I said, you could potentially do that here. It's below the lower Bollinger Band, but I mean, it was showing us that here. It showed us that here on that day, and then we got this big rip to the downside. So right now, it's, people say buy the dip, but this isn't a trending market, okay? So let me just talk about this for a second. If this was a trending market, which it's not, this is neutral, this is going sideways. If it was trending like this and price action was, let's just go black, going like this, boom, 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 like that, those are buy the dip moments, okay? Those are buy the dips. However, if you have this going on where you're below these moving averages, you're not trending, you can range trade, but as it stands right now, this isn't necessarily buying the dip. This is trying to catch a falling knife. That's why I've been saying that you have to be very mindful and very cautious with your risk. You can, if it was trending, like I'd say, I'd be way more confident in this environment to maybe give it some more room or put on a little bit more position size. But clearly, one, it's not trending. And two, if it's not trending, I consider it more of a catching a falling knife, potential catching a falling knife versus buying the dip. So let's keep on going on. IWM on the 15-minute time frame. Yep, resistance, 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 all in the 5-day moving average sloping down. And you can see here it's been holding like so and then just kind of going down. From a positive note, it does look potentially, I did share this on my Discord, like a wedge, and it had the positive divergence on the RSI, positive divergence on the PMO. So it does look like, hey, we can probably get a gap up. I wouldn't be shocked. All these indices are doing the same thing. It's showing that in the short term, bearish momentum is weakening, and it does suggest that we can have a gap up. Now, that's not guaranteed, and the reason why I say, don't be too shocked if it does head lower, or don't be too shocked that if it gaps up. If this was in a trending movement, so if the 5 EMA was like this, right? If the 5 EMA was like that and the price action was putting in that same wedge right here and the RSI was still reading these positive divergences, that would be a lot better because of the short-term context. You have a bullish pattern in bullish context with a bullish divergence. Then you have a lot more ideals in your favor versus you have, one bullish thing here, one bullish thing here, right? But then you have, in a bullish pattern, but it's in bearish context. And if you want odds on your side, you need to stack all the ideals on your side. Now, here's the daily time frame for the TLT. Last time we talked about this, it was in this wedge pattern, broke out, hit the top of the range. This is trending sideways. That's all it's doing. So why do I think that we can potentially have a bounce from here like we've been seeing? Well, because we're at the higher end of this range, right? This is as the market was ripping down lower, we had this big flight to safety right into the upper range. And now we might be able to potentially head lower here. However, you got to understand, if we start breaking out of this range, it can head higher, and it can head a lot higher. So if you are shorting from up here, make sure you're having your stop not too far away. You'd be fading the bullish momentum into an area of resistance. So that would make sense. However, like I said, if we start breaking out of here, what's the news going to be like? What's going to be the driving factor that really does that? Guess that doesn't really matter. But what's the market going to do? And we've been kind of mapping out those key levels as we've been speaking. Now let's get into some indicators. Show's going on a little bit too long as of right now, but we'll try to wrap this up a little bit quicker. So the sell signal triggered, right? We talked about that yesterday. Got some continued sell-off taking place. And when is this going to stop? Who knows, right? That's why we map out key levels. A couple other interesting notes. New lows. Bam! Another big move on new lows. And if we zoom out of that, you can see we haven't seen really a spike like that since really honestly the pandemic. You can see that one right around, what's going on right now? What's going on? No, yes, saw a spike like that right here. Oh my gosh, There we go. Spike like that right there, right before or right kind of during this little pandemic sell-off. That doesn't mean we're going to get the same thing, but it's something to be mindful of. We've been talking about these rising new lows as the market's been higher and higher. And what do you know? It's like the market's chopping now, and it's kind of selling off a little bit, all right? So it's not like the greatest market conditions. If we take a look at these indicators, this is the NYSE-McClellan oscillator, the NYMO. This is a different way of looking at it as we looked at earlier. And then we also have the NAMMO, NASDAQ-McClellan oscillator. Both are getting pretty darn overextended to the downside. That one as well as the NAMMO right there. So you can see both are getting very overextended, which typically suggests that we get bounces, right? We typically get bounces on various stocks, but also to note, this is where potential breakdowns can occur. All right, so just be very careful, right? Like I said, this market's been pricing in a lot of volatility. It's saying that, hey, we can either get a big move to the downside, big move to the upside, and even the indicators, the signal charts are kind of giving us that heads up notice too. The volatility index, this is the VIX, bid up higher, up 18% on this percentage basis terms for the day. But I will say that although we hit a newer low today, so for example, so just look here. This was on the 29th, there, 20 at somewhere around I think it was the 29th. This high, and then right here, it's a little bit lower. All right. Whereas the price of the S&P 500, why isn't my mouse working? I don't know why. Well, the price of the S&P 500 did not actually, it did head lower, so you would expect that this to actually maybe crack that high right there, but it did not. We still have these two gaps beneath us, and those could potentially fill. Oh my gosh, my pen, everything's not working on my mouse. This is so weird. But yeah, so something just to call out there. We had a very strong move, got bid up, saw some fear in the market, still remains high. However, didn't actually crack this previous high, although the market did head lower. So that was interesting. Take a look at NASDAQ. Advanced decline line continues to point down through the zero line, those two EMAs. So we need to see these turn up and get back above zero. That would be a lot healthier, as you can see when that happened. Oh, my mouse is tripping right here. Bam, we saw that move up. When we saw this right here start to turn up and head higher, we saw this move up too as well. So it works best when this is above zero and obviously trading higher. Sorry, my mouse is going everywhere right now. Take a look at the Sailor to Shift rotation tool. Still below zero. That means it's still on a sell signal. It needs to get above this area for potential higher move. This is actually where the, I believe, weekly 5 EMA is kind of holding as resistance as it stands now. I actually posted on Twitter a couple of charts that you can look at from a daily and weekly perspective. I'll actually go over the daily right now. The daily did cross over the 50 EMA, so it's holding there as of right now, but we are still below a downsloping 20-day and kind of a neutral flattening out 50-day moving average. We still have the potential of this can be a potential wedge. So we'll continue to watch. It wants to, obviously from a relative standpoint, start moving above that. And we want to recapture these levels right here. That's right around that weekly 5 EMA, and that could set up for a nice flag. We actually had a very similar type thing actually happen right over here. So we had a flag. It pulled back into this previous area of resistance. When we broke out, we're flagging, and we pulled back into this previous area of resistance. So we're having a very similar type transaction take place here. If we take a look at Ethereum, we said is going to probably be stronger from a more relative standpoint because of the relative strength line. And you can see here, pow, 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 Ethereum is just on this monster rip, leaving Bitcoin really in the dust. So we'll see if this is sustainable. It's coming into around the previous all-time highs. And yeah, we'll see what takes place. Maybe perhaps this is giving us an early indicator that other cryptos are going to start ripping here too, but that is some very strong movement overall as it stands for Ethereum. All right, everybody, that's all I got for you on today's episode. Hope that opened your eyes to some new things. I'm going to be live tomorrow at 9 o'clock Pacific Standard Time, a.m., and then that's 12, I believe, 12 Eastern Standard Time, talking with Michael Guyad about why 95% of traders typically fail and what they can do to kind of put odds, on their side. All right, everybody. See